Hello, this is Jordan, and this video is being recorded on the late evening of Monday, August 26th, 2019, and in this video I'm going to discuss the Gold CoT. Now in this chart we have a weekly bar chart of gold at the top, and we have the Gold CoT at the bottom, and as you know, if you follow my work, I like to measure the net speculative position as a percentage of open interest. That makes it easy to compare and contrast today with what happened a few years ago or even a decade or two ago. It's much more difficult when you're just dealing in nominal positions. Now the CoT, it's a great sentiment indicator, but it's not the be-all, end-all that people make it out to be. I mean, for example, there's this adage that the commercials, the non-speculators at the commercials, they're the smart money and they're always right. But that really misses the point. I mean, if we divide everyone into commercials and speculators, the commercials, they're the users, producers of the commodity, whereas the speculators are basically just traders or even gamblers. Now, the speculators, they tend to be trend followers. If gold goes up, they tend to get more bullish. If gold goes down, they get more bearish, if that's what the major trends are. Now, the commercials, essentially, they go the opposite way. When the price is rising, they tend to position themselves more bearish, and when the price is falling, that's when they cut shorts and tend to get more bullish. Now, we also have to take into account things like technicals and fundamentals. And on the technical side, when gold makes a major breakout, it usually continues to move higher despite an already high net speculative position. Now, I've annotated examples of that on the chart here, and you can see that happened in 2003, and then late 2005, beginning of 2006, and then 2009, throughout 2009, I should say, and now in 2019. Let's go back, look at 2003, the beginning of 2003. That's when gold first had a significant breakout. It broke out to a 6-year high. Now, after the first correction and the next leg up to that high in the middle of 2003, we see that the net speculative position, that got fairly high. That got up to 55% or so, which was extreme at the time. But what happened? Gold had a correction for a few months, and then it continued higher again. And then even later, probably in the summer of 2003, the position went a little bit higher, closer to 60%. Yet look what happened. Gold continued to move higher basically throughout the rest of the year. And even, I didn't mark 2004 on here, just to give another example, but it made a peak in the first half of 2004. That's when, at least based on this chart, that's when the net spec position was the highest. Gold had a correction, then it continued to trend higher. But let's go to the other example. Towards the end of 2005, we can see that those lines in the net spec position was around 55-56%, 3 times at the end of 2005. But look what happened to gold. I mean, it barely corrected at all, and it continued to trend higher. Why? Because it was making a significant breakout. The initial breakout there took it to 17-year highs, and then it went even higher than that. Gold went even higher than that, and then the breakout became an 18, 19, 20, 21-year breakout, etc. So that was a significant technical breakout, really significant. I mean, almost historic. And the extreme net spec position, it didn't matter. And the same thing happened in 2009. Gold consolidated for most of the first half of 2009. I think it broke out September, October, but I marked 4 times there when the net spec position was at an extreme. And yeah, there were little corrections there, but I mean, look what happened, especially in the middle of 2009, right before gold broke out. I mean, when that launched, at the beginning or middle of that launch, that's when the position got up close to 60%. but gold continued to rise all the way up to 1200 or so before it had a correction. And then the other point to make, and this happened in early 06, and then it happened again at the end of 09 into 2010, that's where the commercials actually had to start covering their shorts because the market was so strong. Now, I'm not predicting that that's going to happen now, but that's just a possibility that you have to consider. But more importantly, the big takeaway is that if gold is going to make a major breakout and it holds, then you have to be careful about using the net speculative position in the CoT as a contrary indicator, because you can get really hurt amidst a major breakout. Because we're seeing examples of that, and look what just happened in recent months. Big breakout in gold. It's at a 6-year high. Sure, I mean, it has a ways to go to get to a 7 or even an 8-year high, but it made a 6-year high. That's a significant breakout in line with what happened in the 2000s. And yes, the net spec position is high. It's at 56%. You know, that's very high. There is risk here. But the technical breakout overrides that because history tells us that that happens. Also, we have to think about fundamentals because a lot of people like to compare what's going on to 2016, but fundamentally, things are different than in 2016. Back then, the Fed started raising rates. Now the Fed's cutting rates. It's completely different. You know, back then, you know, real interest rates were falling, but it was temporary because the Fed was hiking rates. They started hiking rates. Back then, gold against foreign currencies was strong, but it wasn't at an all-time high. That's a major positive divergence. So fundamentally, the fundamentals are much stronger than they were in 2016. So yes, the net spec position is at an extreme right now, and it's possible that gold could pull back to the low 1400s before it eventually it reaches that 1700 measured upside target. I'm not predicting that's going to happen because I can't see the future, but a little correction like that would not override the bigger picture. So again, yes, the net speculative position in the CoT, it is at an extreme right now. However, gold just made a major breakout. Look at history. Look what happens when gold makes a major breakout and the net spec position is at an extreme. So if history repeats itself and the Fed continues cutting and fundamentals remain bullish, then outside of corrections here and there, gold is going to continue to trend higher, and the net spec position is probably going to remain pretty high. It might come down a little bit at times, but it's probably going to remain pretty high. That's all for this video. I know I got a little long-winded. It was a little longer than I want it to be, but I hope this info was helpful for all of you. Please subscribe to my channel on YouTube. Also, if you haven't already, go to thedailygold.com, get my book, opt in there at the top. It's free. Thank you so much for listening and watching this video. If you want to follow more of my work, you can find it all at thedailygold.com. Also, consider my premium service. That's at thedailygold.com/premium. It's very affordable. We focus on market timing and picking the best juniors that can make 3, 5, even 10 times your gains. That's what we're trying to do. Thanks again for listening, watching this video. I appreciate it, and I look forward to publishing another update for you guys in the days ahead.